Hi, welcome back. And here's a quick video on Target's balance sheet. The balance sheet, also known as the Consolidated Statement of Financial Position, the financial position of the company, is as of the end, midnight on February 3, 2024, the end of the most recent year, and January 28, 2023, the end of the year before. You'll see this type of thing in retail companies a lot. First, they put their fiscal year end a little after the calendar year end to allow all the sales returns from the holiday season to occur, etc. Further, it'll often have these slightly odd dates because they want the exact number of sales days in the two fiscal years to make sales very comparable across the years. So that's why you have those slightly odd dates. Basically, it's the end of January. All right. And the balance sheet, of course, lists all the assets and then all the liabilities and then the residual equity. In terms of assets, and remember, these numbers are in millions. Thus, when you see 3,805, that actually means 3.8 billion. That's 3,805 millions, or 3,805 million. Inventory is 11.886 billion. This is all of the items, all the yet to be sold items in the stores and the warehouses at midnight on February 3, 2024. Other current assets, 1.807 billion. You could look at the footnote and see what types of things are in that other current assets. Property and equipment. Land at cost is 6.547 billion. Buildings and improvements to those buildings, 37.066 billion net of accumulated depreciation. Fixtures and equipment. This is the shelves in the stores, the neon signs, that type of, the cash registers. That totals 8.765 billion net of accumulated depreciation. Computer hardware and software, 3.428 billion. Construction in process of 1.703 billion. These are the building of new stores and warehouses. They will go into land or buildings and improvements eventually. And then there's the accumulated depreciation. I'm sorry, earlier I said this was net of depreciation. These are all at cost, and there's the total accumulated depreciation on the fixed assets. And so the net property, plant, and equipment is 33.096 billion. Operating lease assets. That's the rights to do business in stores we lease. Those leases have a capitalized value of 3.362 billion. And then other non-current assets of 1.4 billion. And again, there is certainly a footnote on what is some of the big stuff in that 1.4 billion. So total assets are 55,356 million. And by the way, notice the setup of the assets on the balance sheet. The company provides the current assets, the assets that are going to be turned to cash fairly soon. Excuse me, I'll make this more clear. First, and then the long-term assets come next. These are the assets that will help us to make revenues longer than just next year. And then total assets. And then we have the current liabilities, the amounts we owe as of in the next 365 days of 19.3 billion. Now notice, that's a little less than the 17.498 billion of current assets we have. Sorry for that lack of focus at times. I'll fix this thing. Now, does that suggest that the company will have trouble paying its bills? Well, that's a question the analyst has to ask themselves when they use the financial statements. That's called the liquidity of the company. And the truth is, Target will be just fine because they'll generate profits next year to cover those differences. Target has long-term debt, bonds, and other borrowings of $14.922 billion. So of the total assets of the company of $55.356 billion, the company uses debt financing of almost $15 billion. That's called the debt to assets ratio. The analysts will use that a lot. Non-current lease liabilities. Deferred income taxes. You'll learn what that means in tax class and in Financial Accounting and Reporting 3. Other non-current liabilities. Again, there will be a footnote to tell you what's in that $1.939 billion of dollars. So total non-current liabilities are $22.620 billion. That's a debt to assets number. That's our especially expensive debt. And then our total debt to assets is $22 billion over $55 billion. And so that's the total debt to assets ratio that you'll learn when you do financial statement analysis. And then there is the equity of the company. Common stock at par value of $38 million. Additional paid-in capital of $6.761 billion. That's all the contributed capital. And then the retained capital, that's net income earned in the past that has not been paid out as dividends or used to buy back shares, of $7.093 billion. And then there's this thing called accumulated other comprehensive loss that you will learn what that means. It's a very technical topic that you'll learn over the next few courses. So total shareholders' equity is $13.4 billion, and total liabilities and shareholders' investment is, again, that same $55.356 billion. So when you see the balance sheet, you're seeing we have $55.356 billion of assets comprised of these types of things. And this is how we finance those assets. $22 billion with liabilities. $22 billion of long-term liabilities, $19 billion of current liabilities. So roughly $40 billion of $41.5 billion of liabilities and $13.5 billion of equity. Here's a little bit about the common stock. You'll learn what authorized versus issued versus outstanding means in Financial Accounting Reporting 2. And there are 461,675,441 shares issued and outstanding as of the end of the most recent fiscal year. Okay. And of course, they encourage you now to look at the notes to the consolidated financial statements to learn more details about anything you're interested in on the balance sheet. And that is an introduction to the balance sheet. Notice we're not going to talk a lot about the statement of shareholders' equity, but notice that what it is a summary of exactly how equity changed over the last 2 years. So there's total equity on the balance sheet that you just saw, and here it is that same number. This is from the balance sheet, $13.43 billion. There it was at the end of last year, $11.232 billion. And there's those numbers on the statement of shareholders' equity. It shows exactly how equity changed over the last 2 years. We won't spend a lot of time in this course preparing the statement of shareholders' equity, but we will learn it in our curriculum, and you will prepare a lot of these. It's actually a pretty easy financial statement. Okay, I hope you enjoyed this real world introduction to real world financial statements in the context of Target, and have a wonderful day. In the next video, we'll look at their income statement.